County Assessor. Thank you for having me out today. I'm going to go through really quickly just some of the things that we do in the Assessor Department. Go over very quickly how single-family residential properties are valued, because all of you live in Broomfield, so you're going to want to know how that works. And then we're going to go over the handout that's on your table, and it's called How Property Taxes Are Calculated and Mill Levies. And we'll go over that so that you get a better understanding of all the moving parts in your property tax. The Assessor Department values all the property in the county for the purpose of property taxation. We have 9 employees, 6 of which, including myself, are licensed appraisers in the state of Colorado. I'm a certified general appraiser. That's the highest level of licensure that the state issues for licensing for real estate appraisers. So we're real estate appraisers, just like the people that come out and value and do an appraisal for your house when you buy a house and you have a mortgage. The banks hire the appraisers to make sure they're not lending too much on your house, right? So we're all appraisers just like they are. We value houses and land, the commercial property, state assessed, that's utilities, think level 3, United Power, Excel, if we would have it here, rail cars, things of that nature. We also value personal property. That's business personal property for businesses. So not only do they pay a tax on the property that they're leasing or that they own, but they also have to pay tax on their personal property that they use for their business if the total amount of personal property in their business is over $7,500. Okay, so they have a second tax on their personal property. That includes chairs, tables, walk-in refrigerators, computers, stuff like that. Oil and gas production is taxed, and as well, the equipment on the well site is also taxed. And then the current actual value in the county is about $14 billion, so we're a small county. There are 3 approaches to value. The sales comparison approach, which you're all familiar with if you've ever bought a house, and that's what the appraisers are using when they give an appraisal to the bank. The sales comparison approach is the principle of substitution. We look for similar properties like yours to value your property, so that have sold previous to the effective date of the appraisal. The cost approach is what would it take to buy the land, build the building, and then we depreciate it for what its current condition is, right? So we have a depreciated cost for the building, and then what it would cost to buy the land. That's added together. That's the cost approach. The income approach, what can I rent it for today? And then we capitalize the income stream, all right? So those are the 3 approaches to value that are used. The only approach to value that's used in the state of Colorado for single-family residential is a sales comparison approach. So values and how we come up with our values is defined by state statute. This is the book that we use. These are all the little tabbies that I have on every page that I have to refer to make sure we're doing our job right. But because statute isn't always clear, nor does it always have all the different steps that we would need to do in appraisal to get to a value for each of the different types of property, we also have an 1,800-page manual that is published by the state of Colorado that helps us do all the steps for all the different types of properties that we need to appraise. Property tax, as you know, you're all well aware of a lot more things than many owners are. So you know the drill, right? We have to pay for our schools, our fire protection, the city and county services, including police protection, health and human services, the library, all the things that we do, my staff, those kind of things. Ad valorem, taxation is what we call it. It's Latin for according to value. And the property tax that you pay will depend on where you live, because the mill levies depend on where you live and which tax authorities are serving you and providing the services where your house, is located. So this, how our tax is calculated, I'm going to go over in detail in a little bit, so I'm not going to spend any time on this slide, but just to remind you, the property value that's set by the assessor's office times the assessment rate that's set by state legislature every year is the assessed value. The assessed value times your mill levy is your property tax. Tax authorities send the mill levies to the assessor every year by December 15th. We do nothing with them other than to pass them through. We do check them for errors. So, for instance, if Adams 12 Schools that we know has a mill levy around 70 mills would send us in a certification that said we're certifying 1 mill, we would know something's wrong, and we would say, there looks like there's a problem on the, so we do look for errors, potential errors, and we would call the authority if we had any questions, but really we're not doing anything with the levies. We don't approve them. That's not our job. They simply send them to us so that we can actually put them into our computer system so the treasurer can send out a property tax bill. City council reviews and approves the mill levies, but again, it's a ratification process. We don't have any authority as to the mill levies or how high they are or low they are, or what all of that. We have nothing to do with that. It's just kind of a pass-through administrative function. So most property, including your single-family residential properties, so think bricks and sticks and land, is valued every other year on the odd year. You all should have gotten, if you live in the county and you own property, a notice of value in May. May is the time when we send out our notices of value each year. And that is also the month in which you can appeal your property value. If you miss that time and don't appeal in May, you have the ability to appeal after January 1st, so now. So if you missed in May, you can appeal now. Use something called an abatement. Think of an abatement as a late appeal, right? Okay, so you have 2 options. So that the property, the owner can appeal their value. We have 3 levels of appeal. The first one is the assessor level. My team looks at it, decides whether or not we need to have an adjustment, right? We then make our decision. It can go to the 2nd level and then the 3rd level. The 2nd level is the Board of Equalization. It is an extension of City Council. City Council would sit as the Board of Equalization if they chose, but they have chosen to delegate that to a separate committee, the Board of Equalization, and so we have residents that sit on that board and make determinations at the 2nd level of appeal. The 3rd level of appeal is either district court, arbitration, or the Board of Assessment Appeals at the state level. So what do we do? I mean, really? So we make changes to the properties. If you finish your basement, we do that. We put that on the roll. If you put an addition on your house, we add that. If you make significant upgrades to your home, let's say you had a very a property built in 1970s and you bring it up to current market levels of finish, we would change maybe the quality of your home, right? That would affect your value. If you're merely replacing the carpet in your house, it's not going to change your value. But if you're upgrading a lot of stuff in your house, then it might change your value. So so we do that. We look at that every year. We pull the building permits to figure that out, right? We add new buildings, so as we're building new buildings up in Anthem or wherever we are, Skystone, we're adding the new buildings, all the commercial new buildings, new hospitals and hotels and whatever else. We add that, we analyze the sales data, and then we perform a mass appraisal. I'll go over that for single-family residential in a little bit. We value all the property types, so not only are we valuing the bricks and sticks in the land, but we have state assessed, which are the utilities. We have personal business property, business personal property. We have oil and gas production and so forth. So we have lots of other things to value. Each of the appraisers values the land in their area. So they'll look at the land every other year and figure out whether we need to increase what your lot value is as as part of your overall value for your property. We defend our values during the appeal process. We review appeals and decide whether or not we need to make a change. And then we testify at the various levels of appeal. Single-family residential, so only the sales comparison approach, we just talked about that. We use sales that close during the data collection period. That is set in that book. It's set as an 18-month period. We use a 24-month period. The assessor can, at their own discretion and by use type, can extend the data collection period back in 6-month increments back to 5 years. The 5 years is really needed for very rural counties. It's hard for them to get enough sales to figure out what's going on in the market with only using 18 months or 2 years even. So that's really for them. For us, 2 years is fine. It takes out the cyclical nature of real estate, the seasonal nature of some of the sales and so forth. So we use the 24-month period. I'll get to you in a second. So for 2019, in May, our data collection period was July 1, 2016 to June 30th, 2018, right? We're already 18 months past that June 30th, 2018, aren't we? So there you see that we're looking in the rear view mirror, all right? So what's going on in your neighborhood today is not what we were using for your valuation for the next 2 years. So tax year 2019, payable in 2020, tax year 2020, payable in 2021, because we pay at the end of the year, remember, for our taxes. For those 2 years, it's from 16 through 18, right? So that's a while. That's been a while. The other thing that the state requires us to do is they require us to do something called a time adjustment. I like to call it a market adjustment. So in that 24-month period, they have us do a statistical analysis to figure out what the market is doing during the 24 months. Is it increasing? Is it decreasing? Is it stable? And what they want us to do with that number, we have to figure out how much, if it's increasing, which it's been doing, right, since the recession, we have to figure out how much per month it's increasing every month. So we figure it out in the 24-month period in total, and then we divide that by 24, figure out what the monthly increase is. Any sale that occurred between July 1, 2016 and June 30th of 2018, we have to increase to what it would have sold for June 30th of 2018. How do we do that? We take what it sold for and we add that month to month to month. So if it was sold, 18 months before June 30th of 2018, it gets 18 times whatever the increase is per month added to the sales price. That is why when you go onto the website for the assessor and you look at our sales data, it doesn't match what it looks like, that the realtor sent you, right? It doesn't. And you're like, this is ridiculous. What are they doing? We're doing what the state's requiring us to do. We have to add what's going on in the market to what it sold for at the time. Now, if it sells at the end of the period, we don't have to increase it at all, and we don't. But if it sells any other time, we have to add that monthly increase or decrease or whatever, right? To get it to what it would be on June 30th, 2018, because that's our effective date of our appraisal. I think this is the hardest thing for most people to really understand, but there it is. And the other thing that we do is we take concessions out of the sale, and we take personal property that is actually reported by you on your TD 1000. It's one of the documents, many documents that you sign and at your closing. And if you say, oh, it had, I got a $15,000 tractor with my house, because the guy had a tractor, it's a big property, I'm in Wilcox and I need a tractor, right? And he didn't want the tractor, so he gave me the, it was part of the sales price, so we take the 15 grand off the top of the sales price, so we don't want to have that in there, we want to know what the real estate cost, right? Does that make sense? So, I think that's it. Nope. The last one, this is the last slide. We use sales in your neighborhood to revalue your house, right? But we don't always have sales in your neighborhood, so we have to look at competing neighborhoods or what the trend is or that kind of thing to figure out what's going on in your neighborhood to see if we should be, how we should be valuing your properties, your house in here. Now remember, you saw the slide, 21,000 single-family residential houses. We're doing mass appraisal. We're not looking at every house. We're putting houses in groups, right? So that we can group them together, value them as a group. And that's how we do our appraisal. Then we look for outliers once we do the grouping. We look for outliers to see if someone looks like they're falling way outside the range we would expect after we did all the math based on the sales in your neighborhood. The most important factors for your house and valuing your house are square footage, quality. Is it very good or is it average, right? That kind of thing. The style, is it a ranch, a split level, 2-story, right? The number of bathrooms, because plumbing's expensive. We don't care about bedrooms. They're part of the square footage, right? So it's bathrooms and then the garage and the basement, right? Is the basement finished? Is it not finished? That kind of thing. Do you even have a basement? Yeah, those kind of things. Below ground square footage is valued at a percentage of the main living area. So we take the main living area, we get a base rate for that, and then we multiply it by 28% for an unfinished basement. So your unfinished basement is valued at 28% of what your living area is valued at. A finished basement is 40%. I'm going to go on right now, because I know I'm running out of time, and go on to how taxes are calculated, but I want to take maybe a couple questions. We're not going to get wild here, but did you still have a question?
Yeah. Now when you make an assessment of a house or whatever, how do you know, or do you guess if a house has got a finished basement or unfinished basement?
So we look at the building permit data. Sometimes when we get, when Toll Brothers is building up there, they have changes during the permitting process, and sometimes, I'm going to be honest, we'll miss a basement finish just because it might have changed after the initial permit was done, and or something like that. So sometimes we come upon this information after you might have been in your house. You might say, hey, Sandy, I've been in my house for 5 years. It's been finished the whole time. Well, we just figured it out. So congratulations, your value went up because we figured out that you have a finished basement. Maybe you called, maybe we went back through the permitting information, who knows?
But now if you have a finished basement and you did it yourself and you never went for a permit, then you cannot advertise it as a finished basement, is that true?
You can advertise it however you would like. And what I will say is that's how we pick them up. We pick them up on the MLS, right? We look at the MLS and we're like, dang, we have this unfinished, but the realtor's saying it's finished, so that's when we'll pick it up when you sell it. And there you go. That's how we do it. Yes?
Is there still a program for seniors and their property taxes?
Yes, there's a senior homestead exemption. I'll go over that after we go through the next sheet. Yes, sir.
So it doesn't matter how much you spend on your finished basement, it's still based on the upstairs.
Correct. The only time we will add is if you put in, like if you put in another kitchen or something. Say that was something you could do. And you put in another kitchen. We have some ways to add extra stuff like that, but otherwise it's just what you see here. Right? We don't get crazy with it, you know, it's mass appraisal, and so we kind of look at the MLS and see, and if there's a lot of, I mean, some of the houses that maybe in the bigger houses where they might have an extra, almost like a mother-in-law suite in the basement or something, where they have maybe a kitchenette or some extra plumbing or something like that in there, we might add a little bit for that. But generally, we just go with the formula. Last one.
So the square footage is above ground square footage?
The square footage, we value all of it, obviously, with the basement. But yeah, the square footage is above ground, and then we do the basement at the percentage, right? Yeah, but we value all of it, and then, yeah, okay. And walkouts are, we're using the finished basement. We used to have a different, but when we've done our regression lately, we haven't really split that out. So I think all the walkouts are being done at 40% at this point. Maybe a little more, maybe. Okay. Let's go over the handout. Everybody should have their handout. The only, Jean, did you get them on that table? Because I didn't have any for that table. Oh, you do have it. Okay. Okay. Got to pick on the council members. So, actual value times assessment rate is the assessed value, right? The actual value we said is the value that the assessor has on the property, and that's after all 3 levels of appeal. You get the assessment rate for residential right now is 7.15%. Again, that's determined by the state legislature every year. So it's 7.15. They think it might go down to 7.13 next year. It may not. We don't know. We won't know till they will determine this before they end the session in May, right? They always figure out what the new assessment rate is, whether they're going to change it or not. There's been some resistance to changing it from the rural counties because they're getting hammered. They're getting a lot of decreases, and their residential, single-family residential isn't going up like it is in the Front Range, right? So they're getting hammered when that thing goes down. That's the resistance that you'll hear. The non-residential rate is 29%. For oil and gas production, it's 87%. Just so you know. So 7.15% is the magic number. We take the assessed value times the mill levy. Mill levies are a lot of times expressed in that you're looking at kind of underneath the assessed value times the mill levy equation. You'll see the sample mill levy. They're often expressed in like 11.457, but it's mills, right? So you have to divide it by 1,000 to do the math, right? So 11.457 is a mill levy of 0.011457. As we said before, mill levies are set every year. They're set by the tax authorities. So the city and county is a tax authority. The fire district is a tax authority. The school district is a tax authority. We are all separate. We do not govern them. We're not on their boards, right? So everybody's independent. If you have an issue and you want to talk to one of your tax authorities, you need to talk to them directly. We don't have, I mean, we're not related. We administer the property tax for the county, and that's our relationship with them. So let's go down. This is a Spruce Meadows one. So this is a Spruce Meadows mill levy that you're seeing on your handout. City of Broomfield, County of Broomfield, Adams 12 School District 69.984, North Metro Fire District 14.674. RTD has the ability to levy a mill, but they do not. Urban drainage and flood, think surface water management. And then Spruce Meadows Metro District. Ah, the Metro Districts. Everybody's been reading about the Metro Districts. Next to the Metro District, what you're going to see is that there's a bond maturity date. That's when the bond matures, and after that is, that Metro District mill levy will fall off of the total mill levy, and you'll no longer pay to the Metro District after that time, unless they refinance and extend it. Most of the time they're refinancing it, and they're decreasing the mills as they go up. Here's what they do. Metro Districts front-end load their mill levy. Why do they do that? Well, let's think about this. Anthem was farmland. Now, we need water and sewer and cable and electrical and all kinds of stuff, right? Roads, curb and gutter, surface drainage, retention ponds, all that stuff has to be paid for in some way. It used to be that the developer could just roll it into the cost of the houses when they first did their development, and then the people that first moved in would pay for it all. It's way too expensive. Their houses would be priced way too high for the market if they did that now, because of the cost of putting in the infrastructure that I just mentioned. So Metro Districts became a very common way that developers financed the infrastructure for their areas. And when you're going into an area that has been primarily farmed and ranched, you got a lot to do. So that's kind of how they work. Let me get through the end of this page and the next page, and then I'll entertain a few questions, and then I gotta go because I'm sure I'm way over. What I want to just point out to you is in this Spruce Meadows tax area, you'll see that the total mill levy is lower this year for 2019 than it was in 18. So it went down. What went down is Spruce Meadows went down and Adams County schools went down. Those are the two things that went down. Urban drainage went up. The fire district went down a little tiny bit. All right? So that's how they change. They can go up, they can go down, and it depends on revenue. What revenue do they need to pay their bonds, to pay, their teachers, all that stuff. So we have two equations. I'm just showing you the difference between residential and commercial here. So the first equation that you see, where the person pays $5,181, is if they have a residential property that's $500,000 actual value at the assessor's office. If that same person had a $500,000 commercial building in that same tax area, they would pay $21,000 a year for taxes. So that's just a demonstration of the difference between the assessment rates, right? Residential versus commercial. Then you'll see on the last one is if the mill levy was 100, what would you pay? You pay $3,600 a year as opposed to $5,200 a year. So that's the difference, right, in the mill levy. The next page is really kind of showing you that, and I'm not going to go over it because I'm way over. So there's a couple of things. The senior exemption was discussed. That is available for properties. If you've been in your property for 10 years and you're 65 years old on January 1st of the assessment year, then you can apply between January 1st and July 15th of that year to get the exemption for the following year. All right? You get 50% of the first $200,000 of value, or $100,000 knocked off your actual value for your home by getting that exemption. It's worth it, do it. I have applications over there. You use a short form if you're holding your property under your name, Sandy Herbison. You use a long form if you're holding it under a trust, Sandy Herbison Revocable Trust. I use the long form over there. There's a short form and a long form. Short, if just by yourself, you're owning your house. Long form for a trust, right? Okay, so it's there. That's decided on by the state at the budget time every year. They don't fund it every year. They've funded it for the last 3 years. During the recession, they did not fund it. There's also a veterans exemption. That's funded every year regardless. So if you're a veteran versus a senior, the veteran exemption is the better deal because it's the same as the senior, and it's definitely funded every year. The senior exemption is decided upon during the budgeting process with the legislature, so you'll know by May of every year whether they're going to fund it for the following year. So the assessment rate, the state, they tell me what to do, right? The senior exemption, I put it on your property, but they determine whether or not you get it for any given year. The city and county of Broomfield has a combined mill levy of 28.968. We have not changed that mill levy since we became a county in 2001. All the other authorities will, they may change year to year to year. So there's a lot of moving parts. There's the mill levies, the assessment rate, not all of it which we control. I know. I'm sorry.
No, it's good information. We have others.
Okay.
Oh, that's sweet.
You know what? Here's the deal. I am, you know where I live, right? I am Herbison, or Assessor at Broomfield.org. If you have a question tonight that you would like to ask me, email me tomorrow, okay? I'd be happy to answer any questions. Call me on the phone. My business cards are over there. It breaks up my day. I love talking to people. Come and talk to me when you're paying, your water bill, whatever. Just please ask the questions. That's what we're here for. Thank you.